So, welcome to the technical analysis part of the presentation. My name is Peter, I'm Senior Market Analyst at IronFX. We're going to be mixing technicals with fundamentals today. Now, at this point, let's have a look at the US dollar index. It's the forward chart. We need to clean this up a little bit. Okay, let's reposition the labels. I think the S2 has served its purpose and it's time to go. So let's switch that. And the S3 at 100.45. Locking this in. Here we go. We see a clear-cut upward movement of the index, which is currently just below and is about to test the 104.05 resistance line. It's going to be interesting. For the time being, we also note the RSI indicator, which is clearly above the reading of 70, showcasing practically the bullish tendencies within the market, the bullish sentiment within the market. On the flip side, though, the RSI indicator may also be implying that the US dollar has reached overbought levels and may be ripe for a correction lower. It's characteristic how the index has started to flatten out. Similar readings, or signals if you prefer, seem to be coming out of the Bollinger Bands as well. It's characteristic how the price action is flirting with the upper Bollinger Band right here, which on the one hand tends to highlight exactly the upward movement of the US dollar index. However, there seem to be some limitations in place, which may be slowing down the bulls a little bit. Should the bulls maintain control, we may see the US dollar index rising, breaking above the R104.05 and start aiming for the R205.45. On the fundamental level, we tend to note that we had some events which tended to move a little bit the US dollar. On the one side, we had the release of the Fed's May meeting minutes. Now, the meeting minutes more or less tended to show that there seems to be a tendency on behalf of Fed policymakers to ease on their rate hiking path, if not even to pause it. So practically, more or less, that tended to be a little bit dovish. It would be interesting to see how the market reacted on the US dollar index at the moment of the release, the 1 minute chart. Let's go further back. Once again. And that was right here. This was the moment where the minutes were released practically. You can see that there was a 6 ticks downward movement, yet that corrected pretty quickly. Once again, weakened the US dollar, once again supported it, and by 10 o'clock, everything was over. So practically, there was some weakening, but that was only for a short period. The market sentiment tended to remain bullish, and there's a good reason why, actually. It's understandable that market worries about the possibility of the US economy defaulting, actually the US government defaulting on its debt. more or less tended to drive safe haven inflows for the US dollar. Should market woes continue to intensify, we may see the USD rising even further and the index breaking finally above the R1 and start aiming for the R205.45. Once again, on technical level, we would be highlighting the fact that a possible correction lower may be in the cards, given the RSI indicator being above the reading of 70 and the price action hitting constantly on the upper Bollinger Band. Yet, as long as the price action remains above the upward trend line guiding the index, we tend to maintain our bullish outlook. On the flip side, should a correction lower take place and even the price action be able to clearly break the prementioned upward trend line, yet at the same time provide, or if you prefer, remain between the 104.5 and the 103.05, that would be a movement like this. Then we would be switching our bullish outlook in favor of a sideways movement bias initially. For a bearish outlook, however, that may be looking out of touch with the picture on technical level. It's still a possibility and it should be covered. And in that case, we would require, for bearish outlook, we would require the US dollar index to actually break the upward trend line guiding the pair in a sign that practically the upward movement has been interrupted. But we would like also to see a breaking of the S103.05 clear break before actually adopting a bearish outlook, as such a break of the S1 could be signaling the initiation of a bearish movement for the index. In such a case, I wouldn't be surprised to see practically also the price action of the RSI indicator dropping below the reading of 50, actually maybe even breaking below the reading of, breaking below the reading of 70, maybe even below the reading of 50. Okay, let's have a look at Euro USD in a reverse mode. Clear downward movement. Probably, I would say that it has initiated on the 4th, however, yeah, could be. Yeah, initiated on the 4th of May. Nice test here and here, here and here. Continues lower peaks and lower truths. It's already marking a lower true right now. The RSI indicator is at the reading of 30, actually at 29.4, implying a rather bearish sentiment on behalf of the market for the pair. We note how the price action is running along the the lower Bollinger Band. Another indication that the bears have it, maybe even on the other hand though, be implying that the bears may be nearing to overreach the hand here. It's a similar signal which coming out of the RSI indicator as well. The fact that it has broken below the reading of 30 may imply also that the pair may be at oversold levels. For the time being though, definitely we have to change the S1 and turn it into the first resistance line, given that the price action has broken below it. Let's loosen up the chart and go hunting for a new ultimate support line. Nice true here. Could go a little bit lower. 1, 2. Nice touch here. Okay, it's pretty narrow if compared to the S2, but oh, another touch here. That's valid. I'm keeping that. and that would be in green the 1.0440. We're adjusting the chart. Let's cook the levels. R3 now being placed at 1.0910. The R2 at 1.0825. The R1 at 1.0765. The S1 at 1.0670. The S2 at 1.0545. The S3 at 1.0440. So, on fundamental level, besides the US data, which you have mentioned in fundamentals earlier on, I would be noting that there seem to be some worries about the Eurozone entering practically a recession. That's a major market worry for now. And that could be weakening the Euro side as well. We're talking about the consumption as well as the production side of Eurozone's economy. Specifically, to be more exact, it's not the Eurozone's economy as such, it's Germany, which is the main cause of worries. Those characteristics, as we have mentioned that also in the preliminary PMI figures, especially in the manufacturing sector. And we tend to maintain those worries. It may be the case that the Eurozone, or at least Germany, may not be able to avoid a recession. It's a big question, and should the Germans drop into a recession, that could have an adverse effect on the Eurozone as a whole. For the time being, we tend to maintain on a technical level also our bearish tendencies. We highlight the fact once again that we have the Bollinger Bands with a downward slope. We have a clear-cut downward trend line. We have all the moving averages, the 20 in blue, the 50 in green, and the 100 in orange, all pointing downwards. The RSI indicator has reached and is just below the reading of 30. All of that tends to imply a bearish outlook. And I wouldn't be surprised to see the price action continuing to drop, possibly breaking the 1.0670 support line, and with the next possible target for the bears being the 1.0545. On the flip side, should the pair correct a little bit higher, and as long as it doesn't break the downward trend line, clearly we tend to treat it exactly as that, as a correction. Yet should the price action be able to break the downward trend line, then we may be able to reverse or switch, if you prefer, a bearish outlook in favor of a bias for a sideways movement, possibly just below or around the R1 1.0765. For a bullish outlook, however that may seem improbable, it's still a possibility and should be covered. We would require Euro USD to rise, break the downward trend line once again and signal that the downward movement has been interrupted, break also the 1.0765. But for a bullish outlook, we would require the price action to reach, if not even breach, the R2 1.0825, nothing less. I would like to see a higher peak, not than this one, but than this one. Let's move to GBP USD. cable which has been dropping. We're shifting the downward trend line a little bit to the right. And actually, I think this is a bit inclination here. Definitely the sideways lines are no longer valid. Delete those. Let's correct the resistance line once again. We have to correct also the S1 which has been broken. And it's interesting that the level has already started to provide resistance. So it's totally legit to switch it from a support line to resistance line. Let's go hunting for a new ultimate support line. By the way, I would like to correct, or if you prefer, readjust the S2, S3. I think this is far more suitable, given that we have touches on the one and on the downside. And that would be the in red, sorry, in green, the 1.2190. Let's go hunting for a new S3. And I would be placing it a little bit wide off. Note this level here, this true here. Note how it also provided resistance a couple of times and support again. So it seems to be a valid level in my opinion, so I'm keeping that. It's a little bit far off, I know it, but still in green, that would be the 1.2045. We could make some readjustments also for the resistance lines. And this seems like a nice scenario here. Note how the level provided resistance here and support here. That would be the 1.2585. Locking it in. Reposition the labels before correcting them. $1.2445, and they are one at 1.2380. Starting with the S1, which is now being placed at 1.2285. The S2 at 1.2190. Let me reaffirm this. Yep, correct. And finally, the S3, which is being placed at 1.2045. So overall, we tend to maintain our bearish outlook, and that's being based practically on three elements. The first element is that we saw the price action dropping, breaking the 1.2380, maintaining practically the downward trend line, and also the fact that the price action has reached once again The R1 1.2380, and it's currently providing resistance, seems to underscore the decisiveness of the downward motion, in my opinion. On the other hand, I would be noting also that we have all three major moving averages, the 20, the 50, and the 100, in blue, green, and orange respectively, pointing downwards in a clear inclination downward, which more or less tends to highlight the bearish movement. So we tend to maintain our bearish outlook for the pair, and I wouldn't be surprised to see cable aiming, if not even reaching the 1.2285 in the next 24 hours. On the other hand, the correction higher seems to have created also some distance for the RSI indicator, which was nearing the reading of 30. Now it's more or less near 40, implying some hesitation on behalf of the bears. Now, should there be more or less a stabilization of cable, I wouldn't be surprised to see it remaining near or rotating around the R1 1.2380, possibly breaking the downward trend line we have mentioned, in a clear sign that the downward motion was interrupted. For a bullish outlook, I would require a higher peak than this and this one. So I would like to see the price action rising, breaking the 1.2380, breaking the downward trend line, once again showing an interruption of the downward movement, but I would like it also to break the R2 1.2445, which would be signaling the possibility of an initiation of a bullish movement. And that would also allow us to start drawing an upward trend line, showing us the limitations. Okay, let's move now to USD and JPY. Should be going up. Ladies and gents, it is. We still have to readjust though the upward trend line. The 139.40 seems to have shifted a little bit to the upside. $1.3965. And the level is seemingly providing resistance here, so that's an issue. Nevertheless, we tend to maintain our bullish outlook as long as the upward trend line remains intact. And in that case, I wouldn't be surprised to see the pair breaking the 139.65 R1 in a decisive move upwards and start aiming for the bull's next target, which could be the 142.20. Should the pair stabilize though and remain below the R1, and the 139.65 resistance line seems to have the possibility of actually doing that, then we may see the price action remaining in a sideways motion, which would be signaled if the upward trend line was broken. For a bearish outlook, I would require the pair to drop, break the upward trend line, but also break the 137.75. Let me reposition that a little bit. And start aiming for the 135.40. So that would more or less imply a movement like once breaking the upward trend line, but also breaking the S1 137.75 and move lower. The RSI indicator is running along the reading of 70, implying a rather bullish sentiment, yet may also imply that the pair is slowly but steadily correcting a little bit lower or pausing its upward movement as it may have reached overbought levels. Interesting pair. Let's have a look at USD CHF. I think USD CHF is more bullish than the other safe haven pair, USD JPY. Definitely we have to switch this into support line. Let's go hunting. Yep, nice peak here. Keeping that. Could go actually a little bit lower. And I'm basing that, despite this peak being beautiful actually, if we drop here, then you can see a double peak. This one's just a little bit higher. There's a slight range, resistance range right here. Okay, let's keep that. We're adjusting the chart. $0.9320. Okay, that was a mistake. That's better. Let's reposition the labels as well. Starting with the S3, which is being played at 0.8860. The S2 at 0.8935. The S1 at 0.9020. The R1 at 0.9115. The R2 at 0.9220. And the R3 at 0.9320. Let's lock everything in. Now the bullish movement, I think it's more evident. Yet at this point, I would be noting two elements, which are quite interesting. The first would be the fact that this peak is practically very near this one. So let's encircle this to keep a reminder of it. So practically we have levels, or if you prefer, peaks at around the same level. They're very, very similar level. So that may be the beginning of a double top formation here. And should that be the case, we may see the price action dropping, breaking the S1 0.920, but also break all the way down to the S2 0.8935, where the lower throw of the neckline is. It's a very, very interesting level. On the other hand, the bullish upward movement, if you prefer, or the bullish upward trend line is still guiding the pair. So the bullish outlook is still present. We may see the correction lower and then regaining and start to aim for the R1 0.9115. Interestingly enough, I would be noting also the RSI indicator. It's at 63, sorry. Yeah, 63, which may be interpreted as a slightly bullish sentiment on behalf of the market. But definitely it's interesting the fact that it's not as high as other pairs led by with the US dollar as the fixed currency pair. say for example USD JPY is at 70 plus, while we see in this case that the bullish sentiment remains, but it's at lower levels. That may be a hindrance for the bulls. For the time being, though, we tend to maintain our bullish outlook. I wouldn't be surprised to see the price action rising and reaching the R1 0.9115. On the other hand, bear in mind the double top formation, which is quite interesting. Moving now to the Aussie. Okay, we have a clear-cut downward movement. Let's draw also a downward trend line. There is an indicator is below the reading of 30. The price action has broken the 0.6580. So definitely this has to be turned into a resistance line to start with. It's no longer valid as support line for now. Let's go hunting for a new ultimate support level. Slightly lower here in green. $0.627. Backing it in, readjusting the chart. Let's correct the labels. Starting with the R3, which is now being placed at 0.68. The R2, which is being placed at 0.6690. The R1 at 0.6580. The S1 at 0.6450. The S2 at 0.6365. The S3 at 0.6270. Let me check the S3. Yep, correct. Locking it in, locking everything in. So for the time being, we tend to maintain a bearish outlook for the pair, and we expect it to reach or break the S1 0.6450. On the flip side, though, note the RSI indicator, which has dropped below the reading of 30. Okay, on the one hand, definitely highlights the bearish sentiment. On the flip side, though, maybe implying that the pair has reached oversold levels and maybe ripe for correction higher. So I wouldn't be surprised to see the pair's price action rising. Note how the bears are finding it more and more difficult over the past 12 hours to create lower truths. So I wouldn't be surprised to see a correction higher, breaking the downward trend line or shifting it to the right in an effort to aim for the R1 0.6580. Should also the R1 be broken and the price action starts aiming, if not even reaching, the R2 0.6690, then we're talking about a bullish outlook. For the time being, once again, we maintain a bearish outlook. Small warning, word of warning here. Correction higher may be imminent for the pair. It's a maybe, but it's a possibility which you should be keeping in mind. Small glance at gold before we leave. An interesting sideways motion, which is being maintained. So we keep our sideways motion intact. The RSI indicator, despite dropping, is now correcting back to the reading of 50, also implying that the bearish sentiment is fading away here. Okay, that should be it from all of us here at IronFX. Best wishes for solid trading.
Hello, welcome to another of one of our helpful videos. Today, we'll be taking a look at what a call option is. Also known as a high option, a call option is a financial contract between two parties to which the buyer is given the right but not the obligation to purchase a financial instrument or stock from a call option seller at a set price on or before a specific date. The instrument is called the underlying asset. When the price of the underlying asset increases, you will see a profit. The cost of buying the call option is called the premium. The premium acts like your insurance against the large loss. This is because the sum you pay for the option is the maximum amount you can stand to lose on that option. The last day the option contract is valid is called the expiration date or time to maturity. It is the date by which you'll need to exercise your right to buy the asset. If you don't, the option loses its value and you essentially forfeit the premium you paid. The set price is also called the strike price. It's the fee the seller agrees to sell the asset for on or before the expiration date of the contract. So, why does someone typically buy call options? Well, call options are usually purchased to make a profit on stock. They're also considered low risk because the most that you can lose is the premium you paid. But as always, be cautious when trading and understand all the risks that come with it. Thank you for watching.
Okay, all right, guys, welcome to another IronFX exclusive webinar. So yeah, today we'll be on the TDI trading strategy. So yeah, I got to read the disclaimer first before I begin. So the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So the material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained. So redistribution of this material is strictly prohibited. So welcome Christina, welcome Peter, welcome Ruben, welcome Didiero, welcome Steven, welcome, Thomas. So where are you guys from? Where are you guys from, may I ask? Okay, you are from Germany. Wow, nice. That's a place I want to visit one day. So I haven't had the time to go to Europe yet. Oh, Netherlands. Wow, all of you guys are in the European side. So how's your trading week been? How's everyone trading week been? Any trades? Any trades taken? Namibia, where's that? So let me check it out on Google. Namibia. Oh, it's a country in Southern Africa. Nice, nice. All right. Anybody has taken any trades so far this week? Taken any sells, taken any buys? Oh, Christina, you have not taken any trades as you are still learning as a beginner. How long have you been trading? A few gold trades. Wow, nice. Did you buy or sell, Steven? Okay, let me load the layouts first. Oh, both. Okay, you're scalping both ways. Nice. You are against trend and with the trend. Oh, okay. Still learning. What kind of trading strategies do you guys use? So by the way, if you actually have a strategy that is working well for you, please do not change your strategy just because you watch this webinar or watch another webinar teaching you a new type of trading style. Please continue using the strategy that works well for you. Oh, Christina, for 4 months you were taking trading signals but were no good. So learning now for myself. Well, it's very, very normal. So when I first started trading, it's very normal to take signals. I will not fault you guys for it. When I first started trading, I also used a lot of trading signals, even paid for premium signals on Telegram. So it's normal that traders like us start with signals, since most of the time we just want to make money. So last time I actually paid for signals, followed others trading gold, lost a lot of money. So it's part of the learning process. So once you have gotten the taking signals, trading with signals out of the way, the real learning can begin now. Okay. So let us begin. So just a quick recap. So this entire week I've taken, I think, 5 trades. So today I've taken a trade on USD CAD and USD JPY. So USD CAD, you guys can see on the 5-minute chart. So we have a high here that was just taken out, the previous high right there. So that was my original take profit target. So if you draw a line across, that was my take profit target. Take profit moving on towards the 1 minute. So price was around here earlier on. So when price went up around here, wait, let me draw things out. So I actually drew a line across. You actually see that price took out the previous low. So at this point in time, I'll write liquidity taken out. Liquidity taken due to relative equal lows. So I'm actually using smart money concepts, just showing you guys a quick recap before we can begin the topic that we are going through today. So relative equal lows, what I'm looking at, it's candles of, as mentioned, relative equal lows. So the candle was taken out, price got taken out, and then I saw that price went down, shot back up very, very strongly. So at this point, I actually thought I could take a buy already. So I entered using a Fibonacci line, drawing a fib from the bottom of here to the top. I was looking to enter on the retracements. So if you actually draw a line across, there is a nice little tiny overlap support area. Okay, let me just draw the line across. There's a nice overlap support. So this was the support line that I was looking at. Support line. I was trying to enter right there. So I took a long position there. Upon the retest, my stop loss was below the previous swing low. So all the way down, I have a relatively safe stop loss. Most of the time, price would not actually hit my stop loss. So I was actually risking 13 pips for my trade. So I was actually aiming higher, aiming higher, somewhere up on the daily chart. The take profit was higher. But because I had to do some work in office, I actually closed out my trades early. So I closed out my trade early, netted only about 8.4 pips before I closed everything out. So yeah, that's the only trade I've taken on USD CAD. So the next trade, although the risk to reward is negative, but hey, profit is profit, pips is pips. As long as we take profit, we cannot complain. So showing you guys another trade that I took just now earlier, USD JPY. So if you notice that price actually went down, you take a look at this entire swing. It swung all the way up. So obviously when you see such a big move up, you always expect a retracement back down. So what did I do? I actually draw a Fibonacci line from the bottom of this low towards the high right there. So if you draw a Fib bottom to the top, then you realize that I was looking that price actually tapped into the 78.6% Fibonacci ratio. So price continued going down. So I was always looking for some kind of strong momentum like this, strong momentum pushing back up. So a strong momentum reversing back up can indicate that price has reversed, possibly indicating a shift to bullish market structure. So what happened? Price tapped into 78.6. Let me clear things out to make it cleaner for you guys to see. So tap into 78.6, price went down, and then suddenly shot back up very, very strongly. So what did I do? The moment I saw price break, I tried to enter on the next tiny overlap support area. So we have a nice little overlap support. The overlap support was listed right here. So I took a long entry, long position, entered right at that overlap support, stop loss below that recent low, also risking 13 pips, and I aimed for price to head towards the upside. So this was my final take profit target, the previous swing high. So I noticed for USD JPY, normally when price actually consolidates, if you actually notice a pattern, let me get the, okay, the take profit line is not there. So if you actually notice that price went up towards the take profit target, which is the previous swing high, immediately rejected back down. That is the reason why I close my trade always at the next high. So that's a trade I've taken. So it netted me about 24 pips. So next, okay, let me show you guys the IronFX YouTube channel. So webinars like this should be streamed and uploaded to YouTube. So it's under IronFX. Feel free to subscribe to this YouTube channel. Hey, hi there, Daihiru Dande. I think you left. Okay, I think you left. Okay, you're still here. So, hey, good morning to you. Your name is Remain an Ordinary Dahiru Dandere from Sokoto State, Nigeria. All right. So yeah, welcome to this webinar. So if you want to find out more free webinars like this, you can head on towards the IronFX website. So IronFX website, it's at this link right here. So I'll send the link to the chat. You can check the website out. So you can go under IronFX School. Okay, let me retry. IronFX School. Okay, wait. IronFX School under webinars. So it should be listed as popular. Click on it. I'll send the link over to the chat once again. You scroll down. You can actually view our educators that will teach you guys trading strategies. They are Forex instructors. So we have, okay, my image is not here yet. Okay, I haven't introduced myself. So some of you guys have already seen me before. Let me find the webinar part. Okay, so you can see here. So on this page, you can actually notice that we have the TDI trading strategy right here. So the next one, it's live trading strategy on February 23rd, which is tomorrow. So today, I'll be going through the TDI trading strategy. So without further ado, let us begin. Okay. Wait, let me clear things out. Okay. So my name is Chen Yongjing, and I'm the trade analyst for Everest Fortune Group. So Everest Fortune Group is actually the finalists for the best Forex research for 2019, 2020, and 2021. So we are also the finalists for the best equity research for 2020 and 2021. So right now we actually have a special collaboration with IronFX where we are bringing you guys the good stuff, the juicy stuff, and the best trading education that you guys can have. So next, so the first part of this webinar will be held by me. The second part of this webinar will be held by Sarah. So that's her. Later, you guys will be seeing her for the next half. I'll go through half of it. She'll go through the next half of it. Okay. So agenda. It means a few topics to cover for today. What is the Traders Dynamic Index? How does it work? The TDI trading strategy. How can we improve on the strategy? So if you guys want, you guys can actually screenshot it down. So if I'm going too fast, I'm talking too fast, or I'm talking too slow, feel free to let me know in the chat so I can slow down or speed up. So yeah, by the way, any questions you guys have, just ask in the chat immediately. As soon as you can, type it out, ask away. Because if you wait until the end of the webinar, we might not have time to actually answer you guys' questions. So what is the Traders Dynamic Index? So it's actually quite a nifty indicator. So it's actually a combination of three popular indicators all at once. Relative Strength Index, the RSI. I'm sure most of you beginner traders has already used the RSI before. So, and also the moving average, MA, I'm sure you guys have already used it, touch it, on MetaTrader 4, MetaTrader 5, when you open it, it should have the MA or the RSI. We also have something called the Bollinger Bands together with it, so made up of three indicators. So the Traders Dynamic Index is a trend following indicator. Let me write it down. Trend following indicator. So it actually helps traders to identify entry and exit points in the market. So it's actually based on the current market conditions. So the TDI consists of two lines, the red line, which is I'll write it down, red line, which is the TDI's signal line. We also have the green line, which is the TDI's indicator line. So this is signal. This is indicator. After I write down, you guys, please screenshot this down before I continue. So the indicator line is calculated by subtracting the RSI value from the moving average of the price. So the signal line is a smoothed version of the indicator line. So one of the main advantages of the TDI is that it can be used on any time frame and any market, whether it be stocks, Forex, or commodities. The TDI is highly customizable, allowing you to adjust the sensitivity of the indicator based on your personal preference and trading styles. So the TDI can also be used to identify trends as well as overbought, oversold conditions, RSI. So when the green line crosses above the red line, let me show you. Green line crosses above the red line. Maybe there's a slide for it later on. So when the green line crosses above the red line, let me get this out. Okay, it is a bullish signal. So indicating a potential long position. So when the green line actually crosses below the red line, it is a bearish signal, indicating a potential short position. So TDI can also be used to identify divergence. So divergence, we have bullish divergence, we have bearish divergence. So later we will have some examples of the charts where we'll show you guys how to make use of the TDI indicator. So the TDI also uses Bollinger Bands in its calculation by taking the difference between the upper and lower bands and plotting it on the TDI indicator line. So the calculation provides a measure of the volatility in the market, and the TDI uses this information to help identify potential entry and exit points. So let me just move on. Okay, please screenshot this down before we continue. Give me a moment. All right, so we are back. So RSI, it shows the strength, volatility of the market. It indicates if the current price is overbought or oversold. So you got to know green line is the fast, red line is the signal line. Please screenshot this down also. Before we continue, I'll just be going through this slide fast. We'll be going through the examples very, very soon. All right, once you guys have screenshotted it down, let's move on. So the Bollinger Bands is actually used to estimate the oscillation of the trading channel. So it looks like a rubber band. It looks like a very, very big range, a big channel that is forever moving with price. So key zones to define market reversals, 68. Anything above 68, overbought. Anything below 32 is oversold. Please screenshot this down. It's very, very important. It's a key concept to make use of the TDI indicator. All right, once you guys have screenshotted it down, let us move on. So this is how the TDI indicator looks like. You guys can actually go on to TradingView, you search TDI indicator. So when you click on it, add it to your chart, it should show as TDI GM. So looking at the TDI indicator, we still don't know how to use it. So this is a Bollinger Band. This entire huge channel, this red channel, this green channel that is moving along, that's the Bollinger Band. So as mentioned, the green line is the fast line, the red line is the signal line. So green line is to smoothen things out. Red line is the signal line. So you can see here an example. So how does it work? How does it work? So for short term, this is for short term. I'll just highlight it out. So a buy signal. So when the green line, just take it as the green line, crosses the signal red line from below. Note this down. There's a very, very big difference. So a sell signal is when the fast green line crosses the signal red line from above. So just take note, this is a short-term trading signal. So crosses occurs very often. So stronger signals if it crosses in the overbought, oversold zone. Where's the overbought zone? At 68. Oversold zone at 32 region. Please screenshot this down before we continue because we are moving on to the live examples next. So just remember 68 overbought, 32 oversold. Or if you guys find it difficult to remember, take it as overbought as 70, oversold as 30. So you just round it up to the nearest whole number. Okay, next. Taking a look at the TDI trading strategy. How does it work? You notice that at this specific crossover right there, indicated by the blue circle, you notice that the red line has crossed the green line from below. So if you actually look up, once it crosses over, price became a buy signal. So price continued moving bullish for the short term. Okay, Peter, you are using MetaTrader 4. How can you put TDI on your screen? So you can actually download the TDI indicator MT4. So it should have been on the marketplace. Okay, let me find it. Give me a moment. MT4. Okay, maybe you can download it from this website. There are many websites you can find it online. Many TDI indicators, you actually search YouTube. There's a how to add TDI indicator to MT4 or MT5. So feel free to check it out. So maybe this link, is it free? Yup, you can check that link out. Okay, so somebody actually asked a good question. Doesn't it lag behind? So definitely it does lag behind. Every indicator lags behind. If you notice, if you draw a line all the way up, the sell has already happened 1 or 2 candles behind. So in this specific situation, the red line has crossed over the green line from above, indicating a sell signal. So it's more or less lagging indicator. It feels like a MACD indicator. MACD is also lagging behind. So notice right here, sometimes it doesn't lag behind. Notice right here, the red candle has crossed over once again above the green candle. So connecting it up here, price has started to move bullish in the short term. So next, looking at the top, you notice that price has went into the 70, above 70. Notice right here, above 70. What does it mean? Above 70 means it's overbought. So with the price above the overbought area, let me get my pen out. Overbought area, we have the red line crossing below the green line from above. So if you actually draw a line up all the way up, you notice that the crossover happened. You guys can actually take a sell for the short term. Sell until, where do we close out the trade? Sell until price starts to cross over once again. So when price crosses the red line once again, you guys can close out the trade, use it as enter and exit points. Okay, any questions so far? If you guys do not understand anything, feel free to let me know. So I'll clear the chat, erase all ink. You can actually screenshot this down. It's very, very clean now. Okay, maybe I draw a circle where the crossover happened. You guys feel free to screenshot it down. So what's the best time frame to use it? Well, you can actually use it on the 1 minute, 5 minutes, 15 minutes time frame. So personally, if you want a stronger crossover, likely you can use a larger time frame like the 1 hour time frame, because most of the time the smaller time frames such as the 5 minutes, 1 minute chart does not hold much strength. So yeah, once you guys have screenshotted it down, let me continue. So next we have the crossing of the red and orange lines. So after I explain this, screenshot it down. It's very, very important. So this is for longer term trading signal. So for buy signal, the red line crosses the orange line from below. So longer term buy. So this is a sell signal. The red line crosses the orange line from above. So there's a very, very big difference. Instead of playing around with the red line and the green line, right now we're actually using the red line and the orange line. Okay, let's Please screenshot this down before we continue. Next, I'll be showing you examples of how the longer term trading signal actually works. Right, next. Take a look. Now, the red line, I'm talking about the first blue circle right there. The red line crosses above the orange line from below. So right there, longer term trading signal price actually start to move higher and higher. So what happens next? We are looking for a short, a sell signal right here. The red line crosses below the orange line from above. So it's right here, and price started to move bearish. Another example right there. The red line crosses above the orange line from below. So it's also right here, indicating that the market has turned bullish. So another one, the red line has crossed below the orange line. So it's around right here. We actually have a short. So this time frame is likely on the 15 minutes time frame, 1 hour time frame. You guys can check it out. So feel free to screenshot it down. Let me take my eraser. I'll clear this out first so it will be cleaner. Feel free to screenshot it down, this down, before we move on. The next review. All right. Once you guys have screenshot it down, I would like to welcome my next analyst, my colleague. So her name is Sarah. I think I've shown you guys her at the start of the webinar. So this is her. She'll be coming to take over now. Okay, let me move on to this slide. Okay. She'll be taking over now. Please welcome her. Any questions you guys do not know, please feel free to ask her.
Hi everyone, my name is Sarah. So now I will taking over by my colleague Yunjin's part. Okay, so let's do the next half webinar by me. So now let's take a look at the orange line across 32, 15, and 16.8 levels. So actually, this is quite a rare long-term trading signal because when the red line is, when the orange line across level from below is giving us the signal that to buy. Or when the orange line across the level from above is giving us the signal to sell it. Okay, maybe you guys can take a screenshot on this. So this one just is the orange line is whether above or below or crossing it and to buy or to sell. But actually this is quite rare, and this one is in more longer term trading signal. It's not for like a short term trader. Okay, so next one. Okay, so now let's take a look at an example first. So you can see when the orange line across the level level from below, you can see the orange line across the level from below. No, this you can see the point that we circle in blue is the orange line across it from above is sell. Okay, so this sell means you're entering sell here and you are looking for take profit in longer term. Okay, so means you are looking maybe a sell here. Sorry, let me use my pen. Okay, so maybe you sell here and you are looking for take profit in the future. Okay, so this one is more for long-term investor. So let's make it clear first. this signal is for long-term investor, because you see the price actually, if you sell here, is up a little bit, okay, then bounce it, then up a little bit, then finally it is going down. So if you are a long-term trader and you are intend to hold your trade for like maybe more than one month or like a few months, this is the signal that for you to enter it. Same as here, you can see the orange line is crossing the level. You see, this is the level. It's crossing the level here. So it giving us the word from above. So giving us the signal to sell it. So we can sell it here, and while our take profit is all the way to here. Okay, so which is another long-term sell. Because you see, actually, if you sell it here, the price actually bounces towards the resistance first, then down to the support. So same as these things, you can see the orange line is crossing the 13 level, which is this level, from above. It's giving us the signal to sell it. So actually this one, you can see the price is up first. So in long term, the price will drop it, but just not as recently. So far, clear? So now let's take a look at next examples. What is all the index trading strategy? So how are we going to apply all the indicator, all the index to add on our trading strategy and to make our trading strategy more profitable? Okay, so TDI uses several classical indicators at once. So just now my colleague has mentioned, Yongjin has mentioned it, is about RSI, MI, and Bollinger Bands. So the best to use TDI is to use it within trend and support and resistance, and also stop loss. So this all the trend support and resistance is giving you a more clear of targets. When is your stop loss? Where is your stop loss? And where is your take profit? Okay, so now let's look at this example first. So just now, my Yongjin has mentioned it, like which line cross which line, then giving us the signal to buy, giving us the signal to sell it. So let's look at one by one. Before you're looking at the signal first, okay, we may always draw it up all the support and resistance. As you can see, this one first support, which one is the overlap support at price of 1.08856. And the second support is at recent swing low is at 1.0311. The first resistance here is at 1.14849. So now I'm thinking about when is the correct timing that I'm entering the trade and how I'm going to, where is my position? Is there a long position or is there a short position? So let's take a look at maybe here. As you can see, maybe let's look at this point. You can see the right line is crossing the orange line from below. So it's at this place, it's giving us the signal to buy it. Okay, so imagine like we buy it here, then we may put our take profit towards the first support. Okay, or like we may put it higher to the first resistance. So as you can see, it's a very nice trade if you are entering, follow using this signal. And maybe we take another example at here. So you can see the green line is across the right from below, which giving us the signal to buy or to short. The green line across the red from below. Okay, so actually this one giving us the signal to buy it. But you can say, because the price now is at what? It's out our resistance here. So maybe we may think about it. Maybe for me, if I enter in the trade using this indicator, I may not enter in because I need to think about it. It's not at the first resistance. I feel it's a bit dangerous. So you see, when we are using the indicator combining with the resistance and support, it's more easier for us to make profit because this indicator is useful, but you cannot use it solely on the signal when you enter in the trade. Okay, so maybe we take a look at this one. So you can see this one is the orange line crossing. Sorry, there is no level. So maybe we can see the green line is across the red from below. Green line is across the red from below. So it gives me us the signal to buy it. And it's just near the first support. Okay, so maybe we think, oh, it's a very good place to buy it. So maybe my take profit may be somewhere at first resistance. And my stop loss may put at the recent swing low. Okay, so this is a very nice trick that if you're following the signal and also you're following the support and resistance. So there are a lot of cross and different people seeing the graph in different ways. I cannot like show you guys all the cross. So maybe I will try to demo more on different thing, or maybe we can see this one. When you see the red orange line is crossing the level, you see the orange line is crossing this level, is crossing 15 level. So actually for the indicator, it give me us the signal to the orange line crossing the 15 level, crossing the 15 level from below. So it's giving us the signal to buy. So which means we can enter in the trade here, okay? So maybe our take profit will put towards the first resistance, and our stop loss will just put it at first support. Okay, so let's go to next example. Okay, here is another example. Same thing. Let's find out the first resistance, first support, or like second resistance, second support. Because this one, I want to give you guys a more clear explanation. So that's why I just using one resistance and support. So you can see here. The orange line, sorry, it's not orange line, it's the red line crossing the orange line from below. Okay, you can see here. It's giving us the signal to buy it. So we can buy from here and take profit towards the first resistance. Or we may also see this one as a green line across the red from below. Okay, green line across the red from below. It's also giving us the signal to buy. Okay, so you can see actually all indicators sometimes just add more confluence to our buyers, whether we should long it or short it. So let's take a look at this one. So the red line, so the green line across the red line from below. So actually this one giving us the signal to what? To buy it. But let's take a look at the graph chart here. So actually here at the price is somewhere this level. So for me, I feel a little bit insecure because it's in between the first resistance and first support. I need a further signal to give me. If I then means I cannot only rely on this signal. So I will not enter in the trade here. As I will say, okay, if I really enter in the trade for buy, then I lose it. I lose the trade. Or maybe we take an example as maybe we take the example as this one. So orange across the level below, orange line across the 30, this one I think is 39 level. So it's giving us a signal to what? To buy it, right? So maybe we can buy from here and our take profit is towards the first resistance, but actually it did not hit the first resistance. So these are all the signals that give me and whether I should enter in the trade, how I'm entering the trade. Should I long it? Should I short it? Okay, so now let's talking about how to improving on the strategy. Means how are we going to combining with all the indicators to improving our strategy? So firstly, we can use the index with Fibonacci retracement. So we can use all these index together with Fibonacci retracement or first support and second support. First support and first resistance to see is that the correct level or is that the best level for us to enter in the trade. So imagine take this as an example. We can see here the green line. No, sorry, it's here. The green line is crossing the red line from the green line is crossing the red line from below. So imagine we take a look at this one. The green line is crossing the red line from below, which gives us a signal to what? To buy. Okay, so now I take a look at this graph here. So now I take a look at graph here because the price is at the first resistance. So it should not, okay? So I feel I should not enter in the trade. I may wait for further signal to enter in it. Now let's take a look at another examples. Okay, so it's how are we doing it with divergence? So there are different kind of divergence. So here you can see it's very regular bullish divergence. So means bullish divergence means in this shape. So when you use a trading system that anticipating a market move, chances that you may not be wrong or right, but you cannot be right at all the time. As you know, the market is irrational. Therefore, there are times when you right on the money, but there are many times that you need to prove, there are also times it's wrong. Okay, so this is a very regular bullish divergence. And if you're following this, okay, so if you're following this trend, okay, actually this price maybe go up because it's on a bullish divergence. And same for here. This one is a bearish divergence. So a regular bearish divergence is the line we draw it on top of the candlestick, and the line we draw it on top of the red line. Okay, we only draw the divergence by the red line, means we follow this shape. Why we only draw this one? Because the other two other three lines is very smooth. So now let's take a look at TDI with Ichimoku clock. So Ichimoku cloud is another indicator for us to identify is that a bullish or bearish market. So let's just do a quick recap. When the price moving below the cloud, something like this, you see this is a price movement and this is a cloud. So means what? This is a bearish market. So when the price, imagine, is moving here, so it's a bullish market. Okay, so because we are using all the cross together with Ichimoku, that's why it can give us a better signal for us whether it's a bullish or bearish. Should we enter in the trade? Okay, so let's just take a quick examples. So maybe let's take a look at this one. The green line. Okay, so even though the price now is below Ichimoku, okay, you can see some is within Ichimoku. But if I really want to anticipate the market, or I really want to enter in the trade, you can see here, the green line is crossing the red line from below, so giving us the indicator to buy. Okay, so you can see here, even though the price is below Ichimoku, but I still can take a little profit towards a price of 1660. Okay, we may also look at here. The green line. Okay, so now let's look at here. So the green line is crossing the red line from below. So actually this one giving us the signal to buy it, right? But now I feel, okay, so it's at here, okay, the price is within Ichimoku. So I don't like to trade when the price within Ichimoku. So I may just wait it, but I may just hold it until further signal for me. So that is how we are using Ichimoku, okay, to help us to enter in the trade. It's like sometimes it's very good for us to enter in the trade. It's at more confluence. Sometimes it's no, I mean the Ichimoku cloud maybe show you to short it, but the signal for you is to buy it. So maybe you should hold it until further signal. Okay, so now I may end today's webinar, and thank you for your attending. Thank you, everyone.